Hello everyone, I'm Aaron Blake. Bitcoin is once again at a critical crossroads, with analysts warning that the recent price action could signal a much deeper downturn than many expected. After a sharp sell-off and a modest bounce, the market is now testing levels that have historically mattered a great deal. What's happening right now isn't just another routine pullback. According to analysts cited in this report, key technical supports are being challenged, and if they fail to hold, Bitcoin could be facing a period of accelerated bearish pressure that may reshape expectations for where prices could head next. Before we go further, subscribe right now, because what you're about to hear explains a shift most people still haven't noticed. Let me walk you through what has unfolded. Bitcoin recently bounced about 2.6% from its latest lows, attempting to turn the $82,000 to $83,000 zone into a new area of support. This move came after significant volatility, and while the rebound offered some short-term relief, analysts have been clear that the situation remains fragile. The warning is straightforward. If Bitcoin fails to hold crucial macro support levels, the price action could confirm what has been described as bearish acceleration. This development comes after a sharp downturn on Thursday when Bitcoin fell alongside broader markets. In a single day, the price retraced nearly 9%, sliding toward the $81,314 area. To understand why this matters, it's important to look at where Bitcoin had been trading before this drop. Since early November, the cryptocurrency had largely remained within a range between $86,000 and $93,500. Despite frequent volatility, Bitcoin had been managing to close above the lower boundary of that 2-month range on the weekly time frame. What stands out here is that this structure has now been disrupted. In the daily time frame, Bitcoin has lost this key support. According to the article, if the price does not recover the $86,000 level before the end of the week, the risk of a deeper correction increases significantly. The market is now hovering around levels that have not been seen since the correction in late November, and this context is critical for understanding why analysts are sounding the alarm. One market observer has pointed out an additional technical concern. Bitcoin has lost its 100-week exponential moving average as support. This level has historically been important, and its loss is not taken lightly by analysts who focus on long-term price structures. Ted Pillows highlighted that there have only been 2 previous instances when Bitcoin recorded a weekly close below the 100-week EMA. Those instances occurred in 2018 and again in 2022. Here's what the data shows from those periods. In both cases, Bitcoin went on to drop around 50% within a 4 to 6 week window after closing below that moving average. Ted Pillows emphasized that this isn't just about isolated events. He pointed to a broader historical pattern, noting similarities between the 2017 to 2018 cycle and the 2021 to 2022 cycle. In both cases, Bitcoin followed a comparable path after losing key technical support. The analysis also focuses on a long-term chart feature that spans multiple market cycles. According to the article, there is an 8-year ascending trend line that has marked the tops of previous Bitcoin cycles. This trend line began during the late 2017 peak and extended into the next bull market, where it once again marked the 2021 cycle top. This line has effectively acted as a reference point for where major market peaks have formed. What happened after those peaks is particularly relevant. During the 2018 bear market correction, Bitcoin retraced 83.11% from that ascending trend line. In the 2022 pullback, the decline from the cycle top measured 77.57%. Over time, these movements formed a rising support line that has marked where Bitcoin's price ultimately bottomed during previous bear markets. Now, according to the article, Bitcoin appears to have once again topped out around this same trend line. If history were to repeat, the analysis suggests that Bitcoin could retrace as much as 76.88%. Based on that calculation, this would point toward the $30,000 area sometime in 2026. It's important to stress that this figure comes directly from the historical pattern described in the article and reflects a comparison to prior cycles rather than a new or separate projection. As this price action unfolds, another analyst has shared a complementary perspective. Rect Capital examined Bitcoin's recent pullback in the context of a larger technical structure. After breaking down from its weekly price range, Bitcoin is now revisiting the $82,500 level, which marks the bottom of what has been described as a macro triangle formation. Let me explain what this means. According to Rect Capital, Bitcoin has been forming a triangle pattern on the monthly time frame since mid-2024. This pattern is said to be similar to the triangle formation seen in 2021, which preceded the previous bear market. The comparison is based on how price has interacted with both macro support and descending resistance levels over time. Per the analysis outlined in the article, Bitcoin's recent price action closely mirrors what was observed during the 2021 to 2022 period. The price has been respecting macro support while also reacting to a descending resistance line. This balance, however, is now being tested as Bitcoin retests the bottom of the macro triangle. Rect Capital noted that a breakdown from this macro triangle bottom would confirm bearish acceleration. In other words, failing to hold this level would reinforce the idea that downward momentum is increasing. On the other side of that scenario, for bull market continuation to remain intact, the cryptocurrency would need to break above and hold the macro descending resistance on longer time frames. Until that happens, the evidence continues to point toward a structure that resembles past periods of weakness. In his commentary, Rect Capital explained that there is already substantial evidence suggesting the market may be following a similar path to the one seen in 2021. He added that the current situation appears more compressed, meaning the same types of movements may be unfolding over a shorter time frame. This compression does not change the nature of the pattern, but may affect how quickly key levels are tested. Another technical detail highlighted in the article involves Bitcoin's moving averages. Rect Capital pointed out that Bitcoin is showing a similar bull market EMA crossover to the one that occurred during the early stages of the previous bear market. This is an important observation because it adds another layer of confirmation to what the price action is already suggesting. However, the analyst was careful to clarify what this crossover does and does not imply. According to Rect Capital, the imminent crossover does not necessarily predict additional downside on its own. Instead, it is effectively confirming weakness that has already been present. In his words, it is responding to the weakness that the market has been seeing for some time. This distinction matters because it frames the crossover as a reaction rather than a new trigger. It aligns with the broader narrative described in the article, where multiple technical signals are converging to reflect a market under pressure rather than introducing entirely new risks. Rect Capital concluded his assessment by emphasizing a key historical observation. History suggests that if Bitcoin continues to form macro lower highs, especially as a result of weakening demand at historical support regions, there is more reason to be bearish than bullish. This conclusion is based entirely on the recurring patterns observed in prior market cycles and the current structure described in the article. All of these elements together paint a picture of a market at a decisive moment. Bitcoin is not only dealing with short-term volatility, but also confronting long-term technical levels that have defined previous cycles. The loss of the 100-week EMA, the retest of the macro triangle bottom, and the comparison to past bear markets all contribute to the heightened sense of caution expressed by analysts. To put this into deeper context, it's important to understand why these developments matter so much. Bitcoin has historically been driven not just by headlines or sentiment, but by how price behaves around key technical structures. When those structures hold, they can support extended periods of stability or growth. When they break, the resulting moves have often been sharp and sustained. The article highlights that Bitcoin is currently trading at levels last seen during a prior correction, underscoring how quickly conditions have shifted. The failure to maintain support within the previous trading range has changed the technical landscape. This isn't about a single bad trading day. It's about how the market responds in the days and weeks that follow. What also stands out is the consistency of the historical comparisons being made. Analysts are not pointing to isolated indicators. Instead, they are referencing repeated patterns observed across multiple cycles, including 2017 to 2018 and 2021 to 2022. In both cases, similar technical breakdowns were followed by significant declines over relatively short periods. The mention of potential retracements of more than 70% is not presented as a new prediction, but as a reflection of what occurred in previous bear markets. This context helps explain why the $30,000 level is being discussed at all. It emerges from historical behavior tied to the same trend lines and support structures now being tested again. From a broader market perspective, the situation matters because Bitcoin often serves as a reference point for the entire cryptocurrency market. When Bitcoin experiences sustained weakness, it can influence sentiment and positioning across the space. The article does not speculate beyond this, but it makes clear that the current technical setup has implications that go beyond a simple price fluctuation. Another important aspect is timing. The analysts cited are focused on what happens if Bitcoin does or does not reclaim specific levels within defined timeframes, such as recovering $86,000 before the end of the week. These windows matter because they can confirm whether recent moves are temporary or part of a larger shift. As the article explains, the market is now waiting for confirmation. A hold above macro support could stabilize conditions, while a breakdown would add weight to the bearish case already forming. This binary setup is why the current moment is being described with such urgency. To sum up what we know for certain from this report, Bitcoin has experienced a sharp decline, losing key support levels in the process. Analysts have identified the loss of the 100-week EMA and a retest of the macro triangle bottom as significant technical events. Historical comparisons suggest that similar setups in the past led to substantial declines. At the same time, analysts emphasize that these signals confirm existing weakness rather than introducing new factors. The market is now focused on whether Bitcoin can reclaim important resistance levels or whether further downside will validate the bearish acceleration described. This is not a matter of speculation within this report. It is a reflection of the technical structures and historical patterns outlined by the analysts quoted. As this situation continues to develop, the stakes are clear. Bitcoin is navigating a critical phase that has parallels to previous market turning points. The levels being tested now have mattered before, and according to the analysis presented, they matter again today. Thanks for watching. Subscribe, share this video, and stay alert, because what's happening right now matters more than most people realize.